Hey, listen up. I got a question for you. Are you investing or are you an investor? The two are not one and the same. Let's dive into it. So when you think about investing, it's really the act of putting capital or your resources together to make a profit or get to some end result. So that's investing. You're looking at some specific vehicle for a specific amount of time, looking for a specific result. But let's talk about being an investor, because see, there's a big difference between being an investor and investing. And being an investor is more about who you are at the core, how you think, how you look at all areas of your financial life. So let's talk about it. Number one, an investor is always learning. So that's one of the core principles of an investor. You see, they don't look at things and say, I think I know it, I'm done learning. They're always learning. They're always reading books. They're always learning about the next investment. They're always learning about the next company, the next technology that could potentially take their investments or a company into the future and how they can possibly hook up to that and capitalize on it. Number two, an investor at the heart is willing to take calculated risks. You see, an investor knows that part of the game is winning, but also part of the game is losing. But what's going to separate them from people who get kicked out of the game is their ability to take calculated risks that give a high rate of return with a ideally low rate of risk that'll allow them to keep doing those deals long into the future. The third difference between an investor and investing is the way that they think about a loss. You see, an investor's mindset looks at loss different. I think it was Jay-Z who said it best in the song that I will never lose, for even in defeat, a valuable lesson is learned, so it evens it up for me. You see, when an investor loses money or is faced with defeat, they don't look at it as defeat. They look at it as a valuable opportunity to learn something new and to try again in a more intelligent way. Number four. An investor has the long-term vision in mind. You see, people who come into the game thinking that they are investing, if that one deal doesn't work out for them, they say things like, I knew this doesn't work, this isn't for me, or things like that. Where an investor says, how can I make this work? I know that this deal didn't work out for me, but how can I take what I learned in this one to apply it to the next deal? Because I've already determined that this is something that I'm going to be doing for a good portion, if not the rest of my life, or at least until I hit my big goal. So let me give you 4 things that helped me on my journey to becoming an investor that may help you as well. Number 1 is living below financial red line. So what is financial red line? Financial red line is that line that if your expenses go above that, then you are going into debt every single month, which means you're going backwards, not forward. If your income is right here and your debt is right here, then the difference between the two is the amount of money that you have to take calculated risk. One of the biggest problems with most people is that they can't take any calculated risk because their income is right here, but their debt is right here, typically above their head, which means they're drowning. Number 2, I don't need you to do anything, but here's what worked for me. I factored in a learning curve, okay? Most people get started in a new industry. I talked about this in the previous YouTube video, so be sure to check that one out, but it's called the bad, good, great method. Most people don't understand that they have to be bad before they can be good and be good before they can be great. And what that simply means in layman's terms is that there is a learning curve. You don't come out the gate swinging for the fences and hitting home runs. You have to practice. You have to make some mistakes, you learn, you get some feedback, you get better, you try again. And then as you learn, then the curve gets a little bit better and you start to see some of the results of your effort. But no matter what you're doing, you have to factor in the fact that it's going to take you some time to learn it before you can perfect it. Number 3, with respect to investing in the stock market or anything for that matter, don't focus on the money at first. When you really think about what you're doing, whether it's real estate, whether it's the stock market, doesn't matter. What you're really doing is you want to get good, if it's real estate, at finding houses, restoring houses, getting them at a good price, finding them in the best neighborhood, and then turn around and marketing those houses, whether it's for renters or or for sale after you've done all the preliminary homework and the preliminary work to get it up to livable conditions and to put on the market. Same thing with the stock market. You don't actually want to get good at making money. That's not the skill to have. No one ever got paid for making money. But what they did get paid for is finding undervalued stocks, reading charts, determining the best time to buy and the best time to sell, determining when it's oversold. That is the skill that will end up paying the bills. But you don't get paid for just making a lot of money. You get paid for bringing value to the marketplace. So I want you to focus on the specific skill, not the result. If you master the skill, then the result of making money will definitely follow. Number 4, get coaching and mentoring. A lot of people think they can just do this alone. When's the last time that you got surgery from a surgeon who thought, I don't need to see another surgeon do this. I think I can figure it out. Yeah, you don't want that guy working on you, right? If you want to speed up the learning curve, if you want to avoid some of the mistakes, one of the best things you can do is seek out the mentorship, courses, or training of someone that's walked the path that's gone before you. So those are 4 things that can help with transitioning from investing to being an investor. And I also share with you 4 tips that help me on my journey to becoming an investor. If you like this video, be sure to give it a thumbs up. Make sure you subscribe to the channel so you can get notified when new videos come out by hitting the bell notification. And feel free to visit thebrownreport.com for more in-depth trainings about the stock market and options trading.